Hi, good evening. This is Neil Yon. This is Accounting 452. This is a brief summary for purposes of the taxjournal.com of the current landscape of the federal estate tax for the year 2008. This is critical to note as a footnote that the entire landscape of this illustration will likely be adjusted depending on the outcome and depending on George Bush's phase out as it's currently set in 2010 and 2011, what I'll call the sunset. So let's do this. This is the federal estate tax, and you say, well, what is the federal estate tax? A gross estate is set forth in sections 2031 through sections 2046 of the Internal Revenue Code of 1986. Typically, your all-inclusive provision is section 2033, but then there are a number of other sections that are illustrated in other videos that will outline just where the assets ultimately come into play. But typically what you'll do is you'll say, okay, what is my gross estate? And let's say my gross estate is, in the year of my death, $3 million. Well, now let's look at that and say, okay, well, what is the year of death for Neil? Well, if I passed in the year 2003, and if I had $3 million, you can see my exclusion amount would be $1 million. So I'd have $2 million, which would be subject to the estate tax. In 2004 and 5, I had $1.5 million, or $1.5 million. If I had a $3 million estate, I'd have $1,500,000 subject to estate tax. That continues down. So for purposes of 2006 through 2008, it's at $2 million. So if I died in those periods or in this year, and I have a $2 or $3 million estate, the exclusion amount that I get is $2 million in that year. So $1 million of my estate will be taxed. In the year 2009, the exclusion amount is $3.5 million. Naturally, if I have a $3 million estate, I'm under the exclusion amount, and I will not have a federal taxable estate. In 2010, it's repealed. There are some really quirky rules, but all of this all depends upon what happens with the sunset. And you say, well, what's the sunset? These are all part of what was called EGTRA, which was passed by George Bush, GW that is. EGTRA then put into place this schedule, but it goes back to the prior schedule of an exclusion amount of $1 million in 2011. Note, the probability of that actually going back down to $1 million or the phase out and the repeal is up in the air. But let's go back to 2008, and if I had a $3 million estate, and you say, well, what is ultimately comprised of a gross estate? If I have $3 million worth of assets, you then subtract debts and taxes and other expenses, any losses, any charitable bequests that I have. But most importantly, if I'm married, there's what's called the marital deduction, and that is governed under Section 2056 and 2056 Cap A of the Internal Revenue Code. And you say, well, why are you referencing that? Because anything that I leave of my $3 million, if I left my wife, the exclusion amount comes into play, but the balance, if I left it to her, would be subject to the marital deduction. So there are ways to circumvent any payment of estate tax upon the passing of an individual who has a spouse. However, if it's $3 million, it's 2008, and I pass away, I only have a $2 million exclusion, that $1 million would be subject to tax. And you say, well, what's the rate? It varies, but let's call it approximately at the 47%, in between 45 and 50%. And you say, okay, on $1 million, that's approximately just under $500,000 of federal estate tax. I have not included within that calculation Pennsylvania inheritance tax or whatever tax would be applicable unique to your state. Thank you.